Okay. Sorry. So good afternoon, everybody, and welcome at another episode of Bazaar Pe Charcha. Today, 22nd December, and I think this is last Bazaar Pe Charcha of this calendar year 2022. But before discussion anything, this is disclaimer from our side that whatever we are going to discuss in this webinar should not be considered as a buy or sell recommendation of any security or index, and all information intended for educational purpose only. Okay, and we are not having any exposure in any particular stock or index. Okay, so let's move further to discuss about market. So this is current market condition as per O'Neill methodology. So if you see, as per O'Neill methodology of market direction, Nifty and Sensex both are still in rally mode. Sorry, even though there is some elevated numbers of distribution day, I think in Nifty and Sensex both there are 4 distribution day count. But it is, and today it has almost, I think it is breached about a 50 DMA. So we are waiting for another day to downgrade the market from rally to under pressure. But today I can say it is still in rally mode. Apart from Bank Nifty is also in rally mode, and FMCG and metal. And now if I talk about pharma, so as per O'Neill methodology, pharma still is in under pressure, but yesterday there was a big bullish candle formation. Today it was in sideways only, I can say. But I think there would be some positive actions in pharma sector in coming days. So let's see how development will happen regarding this fresh leg of COVID breakout, and maybe that is going to trigger pharma sector. So that is why we are going to keep pharma sector and few selected pharma stocks in our watch. Otherwise, overall market is not looking that much attractive at current juncture as per O'Neill methodology as well as per technically. So let's discuss overall market technically on chart. So if I talk about this is the daily chart of this Nifty 50. So in Nifty 50, you can sorry, actually I have cough, that is I'm facing some problem. So Nifty 50 today it has retested 50 DMA, and there is a trend line that I have drawn, this red color trend line here. So this, and that it has retested that trend line also, that is upward sloping trend line, started from here from multi-month low, which was recorded in the month of June 2022. So I can say this red color line, upward sloping red color line, is a multi-month upward sloping trend line. So 50 DMA as well as this trend line is a key level to watch. This trend line is placed around 18,000 kind of level. So maybe if it will breach, then the market will automatically move in uptrend under pressure as per O'Neill methodology, and then this selling pressure may also accelerate, but don't know. But if I talk about levels point of view, so first critical level is around this 50 DMA, which is around 18,100, followed by 18,000, and below 18,000 I can say more selling pressure may be there in market. Next target would be 17,800, and further 17,000 below 17,800, maybe more downside acceleration technically.
So, Pawan, just to interrupt, sorry for that. Mayuresh here, guys. For the market today, there was a distribution day. It has come to 5. We have breached the 50 DMA, so we've actually pushed the note to uptrend under pressure. So, Pawan, since you're traveling, I think you don't have access to the net. You're probably not seeing that. But 5 दिन हो गया Nifty पे, Sensex also close to breaching its 50 DMA. We've actually pushed the market to uptrend under pressure today.
Okay, thank you, Mayuresh, for updating. Okay, so So now we have moved in market. So technically also market is not looking that much attractive, and maybe below 18,000 some more selling pressure will be there in market. Then you can target this horizontal green color line that I have drawn on chart, this daily chart, that is placed around 70 in the way around 17,800. That is another leg of support. Maybe falling below that, maybe I can say more downside acceleration. So on weekly chart and daily chart, momentum is deteriorating. So I can say that maybe market may remain in sideways only with negative bias. I'm not seeing any fresh upside in at least next couple of weeks or in the month of January. So most probably it will remain traded in a sideways with negative bias. Nifty, okay. If I talk about Bank Nifty, so Bank Nifty here, uh, Bank Nifty also today it has breached this 21-day exponential moving average and approaching toward 50 DMA. Maybe sooner or later it will in next couple of trading sessions it will breach this 50 DMA as well, and falling below that it may accelerate further below 41,000 also. So even though this Bank Nifty has outperformed to overall market in last few months, actually last 6 7 months, but now it is also showing some sort of correction. But in my opinion it is still in comparatively it is outperforming to Nifty and overall market. And maybe once this leg of correction will be over, then banking space will be arise once again for fresh buying opportunity. But yes, meanwhile it has entered into sideways with negative buys, or I can say it has entered into in correction, and it will take few more days or few more weeks to get settled in current market scenario. Okay, so I have some cough issue. That is why I'm handing over this call to my colleague Yatisa. He will discuss remaining sector. I and Yatisa.
Thank you, Pawan. So let us, I'll just share my screen and continue the sectors. So hope everyone can see my screen and my voice is audible. Let us, yes, and the next important sector is Nifty FMCG. So in this difficult market, the only two sectors, that is FMCG and pharma, are the two defensive sectors are holding up. So what we'll discuss FMCG, how it plays. So if you see the this is FMCG daily chart, and in the last if you see the monthly charts consecutively making a higher low price formation in the last 4 5 months. So also in the weekly chart also it's trading after it making all-time high around 46,000 from last 2 weeks. These 2 weeks it's witnessing a slight profit booking. But let's come back to the daily chart. So this is a level where it is like a do or die situation for Nifty FMCG. Ideally, it should hold this level, that is around 44,800 level. So this is a major crucial level for Nifty FMCG. Also, if you see, there is a small head and shoulder kind of pattern over here in this range. So already it has given a neckline breakdown. However, it has to hold this 44,000 followed by 50 DMA also is placed around this level. However, our momentum is slightly low and MACD also turned negative. So that is a bit worry in the Nifty FMCG sector. So price action still standing near that support level. So until this level it's hold up, we can see some support at this level and bouncing back from this level. So if in case if there is a chance of break of 50 DMA, then we might see 43,000, 43,500, 43,000 kind of level in the next coming weeks. This is regarding Nifty FMCG, and move on to Nifty Metal. So Nifty Metal also rebounded sharply, and it has already reached the previous all-time high, that is which made in April of this year. So after touching that new high, it is making a sideways pattern consolidation here, and from last 2 days it witnessed a profit booking. There is a breakdown here. There is a small if you consider this horizontal line, the red color line. So it has given a small breakdown over here in the previous high also. So that is today only. So next level of support is placed around 50 DMA as well as this price support action, price action level. So 50 DMA is the next support level, that is around 6350 level. So we can expect it may come to this level if the market continues to slide. So on the upside, it has to cross this level, that is 6,800 level for the further upside. Okay, so this is regarding Nifty, FMCG and metal, and Rahi will continue the rest of the sectors. Rahi, over to you.
Yeah, thank you so much, Atisha. So I would be talking about Nifty Energy. So this is the daily chart of Nifty Energy. So if we look at the chart and analyze it, the index has actually touched the high in November only. I think in December, 1st of December, and then from day one of this month, it has actually tried to consolidate, and the entire month the index has been in the consolidation phase only. The index has actually is still in the consolidation phase, and it has also breached its 200 EMA. So Nifty Energy is actually in the consolidation phase, and at this point of time, and the market is also in the very volatile situation. So and the main reason behind this Nifty Energy sector's fluctuation, because the major component of this Nifty Energy is Reliance Industry. So we will discuss Reliance Industry as well. So if you look at the chart of Reliance itself, the index also behaved in the same pattern, and if we can also say that the chart is identical, even in the Nifty Energy and the Reliance chart, both are identical. So we can clearly find the reason here that why index has fallen, because Reliance has fallen here, so index has fallen too. So we need to keep an eye on Reliance, and if you get the right entry, and we can also connect this stock with the Nifty sectors. So once there is upside move in this Reliance Industry, then we can expect upside move in Nifty energy sector as well. So as of now, it would be actually appreciable if anyone who is looking to invest in the energy sector, we need to wait and watch for this. So again, I will move to the Nifty energy sector again, so that I just wanted to relate it with the Reliance and the sector itself. So as I have told, that index is in the consolidation phase, and we can only enter here once the index try to reclaim its 200 DM, because 200 DM is also breached, and 200 reclaim is not only the entry point. We need to wait and watch for 100 DMA, that is this line, that 26,684, where 100 DMA is placed. So ideal entry point would be in this particular sectoral component, or whatever the sectors that what are the stocks which is available here, is 26,700 around. So once this index reclaims that particular level, then we might think about this particular sector of the index to take position in. So this is about Nifty Energy. So now I will be talking about Nifty Auto. So Nifty Auto also, this entire month has went under consolidation phase only. If you look at the chart here, like 30th November, from that day where index has made its recent high, I can say, because the previous high was 13,544, and again it has made the lower high here at 13,280 or 295, we can say. So after that, again this entire December month went into the consolidation phase, and that is up to 21st of December. 22nd December, that is up to today trading session has been not recorded here, but today also this auto sector has fallen. Actually, it has declined. So it has already breached its support level, where the support was placed around 12,668, we can say, or in the range of 12,700 or 650. So that support is also breached. So I think this sector is actually on the verge of decline. So we need to wait and watch for this particular sector to take position in these stocks. Nifty Pharma. So Nifty Pharma, as Pawan has already mentioned in his opening statement, that there has been some resilience in the pharma sectors, and it is not denying that some of the stocks in this particular space are doing good. Like we have already mentioned here, if you look at this chart, like Lupin, Sun Pharma, Abbott India, Zydus Wellness, Morpil Lab, these stocks are actually trying to rise. So we can expect some move from these stocks, and that will add value here in this particular space. And the stocks actually try to show resilience after hitting its recent low at 12,529. So 12,500 is acting as a support, we can say. Here also on the 20th of December, it has made the low at 12,529. Even on 19th of December, it has made the high, it has made the low of around 529. So we can say that 12,500 is acting as a support for this particular index, and a stock is actually showing a resilience. If you look at the volume part also, it is actually above average volume. So we can try to, it is a time to filter some of the stocks where entry point is actually good, and where we can make some profit in this particular stocks, in this particular sector, from this particular sectors. Now Nifty IT. So this is the daily chart of Nifty IT. The index has actually showed great resilience here from September only, and from that day, from that September 26th, it has actually run with a huge rally, and till December 1st, it has actually on the top of this, means recent high, it has made around 31,227. So from that day, from the 2nd December itself, this IT pack has actually, or IT sector is actually tried to deteriorate, and it is actually again went under the consolidation phase, where in this process it has breached its major support level, major key moving in averages as well, where it has breached its 200 DMA on 8th of December. Again, it has breached 50 DMA on 12th of December, and recently it has also breached its 100 DMA on 16th of December. So it has breached its all major support level. So now the stock is actually, from past 2 days, if you will see that actually it has tried to move on from its lower level, where buying interest has again tried to buying interest has actually again visible from past 2 days, but it is too early to say that whether it will try to show this resilience that it has shown from December to from September to December or not. But we need to wait and watch. And as I mentioned, for the auto pack or any energy pack or pharma stocks, that we need to keep eyes on some of the stocks in this particular sector, where we need to make our buy watch list, but it is not right time to enter in this particular sector as well. So Yatisha, one more is left, I think.
Yeah, I think realty.
Okay.
Yes, sir. Yeah, I will take it. Let me share my screen.
Mayuresh, would you like to discuss something?
Yeah, let Yatisha finish realty, then I have a.
Okay.
So Yatisha, I'll word with realty.
Yeah. So Nifty Realty, from this month, it has been negative for Nifty Realty. Also, if you see the consolidation phase from 560 to 560, it is continued to, we have been discussing this sector from last 4 months. This is a range for Nifty Realty. It's continued to trade in this range. And on the weekly chart also, it's there is a trend line which is coming from here, from the low of June. And this week almost over. Today, tomorrow there is one more session. And this week it has given a clear-cut breakdown over here, and currently it's trading with the support of 100 DMA. So next level of support is placed around 400 level, 405 level. So breaking below this level, we'll see a further downside towards 370 kind of level. So on the upside, this 480 is a level on the crucial level. It has to close this above level, this level to further upside. So, but looking at the momentum and the MACD, other technicals, it's quite difficult to cross this 480 level as of now. So it's kind of sideways sideways to negative kind of moving will continue in the Nifty realty sector. So we have finished all the sector details. Mayurish you can discuss the.
Sure.
Yeah.
Sure. Thanks, Rai. Thanks, Atisha. Good evening, everyone. Hope my audio is loud and clear. Two things have happened very abruptly, right? Yesterday and today. The COVID news which has come out and the actions that are being taken by the government out here, respectively, and instructions given to state governments. I think there is a lot of fear happening on two counts, as I see in the markets, right? One, the markets is fearing that if cases go up exponentially across the globe at this point of time, global disruptions to hai. Secondly, will it create additional controls when it comes to the Indian economy going forward? So that's point number one. Point number two is that if cases, because the new variant largely is expected not to be too virulent at this point of time, nor is it too severe, but you never know what the exact genome sequencing can come out with and what the actual testing suggests. It doesn't seem to be very serious right now, and therefore the market is taking it in its stride as we see it right now. But the fear factor is that agar kuch or kharab ho gaya, then are we looking at some kind of partial lockdowns or something like that? So I think these are the two focal points on the abrupt selling which had happened into the markets yesterday and today. So if you look at the structure, right, somebody was asking the question in terms of the small cap indices and the mid cap as well. The small cap 50 and the small cap 250 have clearly breached their 50 DMA, right? So they are definitely with good volumes, which basically means that उसमें एक downtrend चालू हो गया. So if you look at the index level, obviously Nifty has cracked that. Sensex close to cracking its 50 DMA. Mid cap 100 cracked its 50 DMA again today with good volumes. And distribution day count is exceeding as well. So I think that's triggered a lot of our positions, both in the TraderSmith India model portfolio as well as on the TraderSmith portfolio as well. But we have to take it in our stride, and what we have always followed in terms of rules, right? We still follow our rules. The D-Day count has increased significantly. Where do the market rest year onwards? I think the 100 DMA as a first sign, obviously 18,000, which is the Nifty level, becomes extremely critical and important to be seen as a support, and then 17,800, which is the 100 DMA for the market itself, will become a critical support functionality going forward. With the triggering of positions, obviously, I think there have been some element in terms of how the view can be going forward. Can there be a sharp bounce back? That is not ruled out, right? Because FIs will start going on their Christmas vacations, volume will go down, so there will be an NAV adjustment in terms of certain stocks showing decent amount of moves. But as Pawan discussed, as Rai Atish also discussed, and as we are seeing on the O'Neill lens as well, this period, yes, was very painful, but it was marred, at least on our research recommendations, on a lot of factors which have combined together, right? Recessionary fears being accentuated by central bankers, policy actions by RBI. Even yesterday's RBI statement seemed to be very hawkish coming out, right? A few of the members, including the governor and the deputy governor, is exactly saying the same thing, that they want to keep inflation under control, and therefore rates might see some upward trajectory, even though with a smaller bias. Will that temper growth in terms of the forced slowdown? If this Chinese situation goes out of hand, do they revert back to larger lockdowns? Is supply chain issues again going to be an issue? So it becomes a kind of a spiraling event going forward. Will semiconductor production stop? Is there a stop of production of a lot of input materials that you've seen? Case in point being, as an example, the API prices, right? They've already started moving higher because supplies of paracetamol, naproxen, and a lot of APIs which use a lot of input cost or raw materials from China is seeing pressure and will see further pressure. So the costs have started going up quite significantly. Next month is also very interesting because from 10th or 12th, you will have results flowing in, and you're also going to have the budget on the 1st of Feb. So there is going to be a large amount of expectation that is going to get built around this. Now, for the budget itself, I think a lot of expectations get built around, but we always know that the limitation that the central government has in terms of their balance sheet, and you see a day or two of action, and then you probably revert back to mean. So to a large extent, I think the abrupt move of the market over the last 2 days, how it plays out, if the news plays out positively, which we all hope, fingers crossed, that nothing is expected to be worst, specifically on the COVID front, you might see a decent pullback happening, but then we'll see how the markets react. And therefore, I think this entire phase, defensives will come back to the fore. They already did today. A few pharma stocks, even though IT has some element in terms of headwinds in terms of numbers and earnings profile, they do come back into the limelight as well. So FMCG, pharma, a little bit of IT is something to be seen. Uh, the large element also is how earnings will play out, right? Because that is ultimately how the markets will position themselves. So we will wait and monitor on how this D-Day count happens. We are not going to go aggressive in terms of pullbacks, except for these sectors. The TraderSmith team has added a couple of pharma stocks today. Obviously, I think the market needs a reason every time. So PS1, one of the users has put in a reason. The market needs a reason to correct. Maybe COVID is the reason for this correction. The volumes are not too excessive, right? And therefore, we are even pointing out on MSI and TraderSmith as well, that technically, I think that 7-8% breaches which are happening on not excessive volumes. The volumes are there. But since we follow our rules for our stop losses, I think the volumes have not been too significant for both counts. FI is probably going on leave, and the reasoning that the market has at this point of time, with lower activity happening on both counts, at both the domestic and the foreign institution and end as well. Now, going forward, a lot of points are known to the markets, right, guys? Recession is largely discounted. Abhi wo kitna bura hota hai in the first quarter of next year, we'll come to in the next calendar year. Whether you are seeing massive growth deterioration, earnings deterioration because of a lot of these factors coming together, the next 3 months will tell us. If the COVID situation goes really out of hand, the next 3 months will tell us. So there are a lot of unknowns that we are seeing into the market, but a lot of these unknowns are getting gestated. Market ko agar genuinely iske aage girna hai, and when volumes come back in January, a lot of these factors will be considered along with earnings, as I said, what happens on the macro front, what happens on global macros, global earnings, and on the global COVID health related situation as well. Acha khasa gestate ho chuka, it might correct to a certain degree on that, but the larger market fall, if it has to come, will be a reason unknown to this. And this is what has happened in the past as well, right? So we'll wait and watch. We'll see how the markets evolve from here, both on MSI and TraderSmith as well. A few pockets, obviously interesting over the next few weeks as classical defensive every time the market corrects. But yes, the abrupt fall and the underperformance, we are not shying away from it at MSI and TS. I think that has been the case. But largely, I think it's more what is happening on the macro front and on the news flows that is surrounding the markets. So let's have a very stock specific approach here onwards, and let's monitor the macros very, very closely. We are here in terms of our conversations and obviously our learning notes as well. So I'll hand it over to Yatish and Rai as well, so we can have some stock queries to discuss for today's Bazaar. Over to you guys.
Thank you, Marish. So let us discuss stock queries. So let's start from, yes, we have put market, we are under pressure with as Nifty breaks its 50 DMA as well as distribution day is elevated to 5. So I think in some time you will be receiving the all the changes in the portfolio as well as whatever the market status and how do you act in this particular situation. So also that is regarding distribution day and 50 DMA, and will we exit from the all stock, please suggest, and it's time to carry. Yeah, this is a time where you can reduce your exposure and reduce your exposure and keep it under the cash. Whenever make sure the stock is making a base. Once it breaks out, then only put your money. And when you are putting the money, don't put 100%. You can raise the exposure. So you can make it like a risk management is a key over here in this difficult situation. And Aegis Logistics model portfolio. Yes, I think today only Aegis Logistics has been removed from the model portfolio as it breached its 100 DMA or 50 DMA, 21 DMA. So yes, I think 21 DMA it's holding up as of now on a closing basis. So there is no sign of weakness, but there is a small kind of a shake-up which happened today and yesterday's session. So it's kind of bit negative side, but until then it's better to hold at this. It's likely to hold this level. And next one is small cap. Even small cap also. So small cap also, it's after this. This is a level. I guess we have discussed this in the earlier webinar. 9,900, 10,000 level. So this is a level where it faced a strong resistance and it pulled back. And also today, if you see the my horizontal line, so this is the level where support was placed and a prior high also. So today it has yesterday, I think yesterday it has broken all the lows, and today it has touched its 100 DMA also. So bearishness is it's still there in the small cap sector as well as mid cap sector. So better to be, put it sideways in this market. Keep your money for the next leg run of bull market. So next one is RHIM. So RHIM today it has break. There is if you see the trend line, if you start the trend line from here to this, so today it has kind of broken that trend line, and but maybe it's trading near that trend line. So better to keep us. One can keep a book a half profit at this point of time, so that if further fall in the market, so you'll be washing out your all the hard-earned profit. So better to book a 50% over here, and better to wait if it closes below this level, that is 740 kind of level, then we can exit completely from this stock. So fresh buy is not advisable at this current point of time. So 740 is idle stop loss for RHIM. JK paper and TNPL. JK paper, I think day before yesterday, on this day, especially, yes, on December 19th and December 20, it has given a very good breakout. But yesterday, it did not sustain that breakout level and breaks below this level. So also, if you mark an uptrend from this low to this low, so it's currently trading above that level. Here there is comes the risk management of whenever the breakout fails. Here the breakout has been failed, so either you can completely exit from this position and completely exit from this position, or you can wait for this trend line 100 DMA or 100 this price support level. So there is two possibilities. So based on your risk appetite, you can trade accordingly. But breakout has been failed as of now. So once again, it has to cross this 445, 450 kind of level for the further upside. So until then, you can avoid as of now. And TNPL. So TNPL today, yes, today I think yesterday also it has given a breakdown here. So one can exit, one can better to exit at this current juncture. Better not to enter at this point in TNPL. So it's all key moving averages has been sideways. If you see the 100 DMA, 50 DMA has been merged, converged here. So its price action is deteriorated. So better to exit, and higher volume also. So next leg of support is placed around that is 230 kind of level. So better not to wait till there. You can exit, and better to enter only after only after it crosses 267 to 70 kind of price action. So better to keep an alert over there and act accordingly. And Rahi, can you take a few queries?
Yeah, sure.
Okay.
So I am taking Sun Pharma and Indian Hotel because it is being asked so many times. So please stop share. Okay, I will share my screen now.
Okay.
So this is the chart of Sun Pharma. We have, as we have mentioned, actually, Pawan has mentioned that there has been some resilience in the pharma pack, and because of that reason, we have added Sun Pharma Lupin also, and and we have it is already added in the TraderSmith. So, and the stop loss, if you can see, is it is around 974 stop loss is there. So yeah, as of now, and if you look at Sun Pharma, it is looking quite attractive, and please try to stick with the stop loss rule because market is not that convincing. So we need to follow the stop loss religiously, whatever we are sending in our email or in the notification. One is Indian Hotel, I guess. Someone is asking Indian Hotel also. Indian Hotel. So Indian Hotel was actually trading in a sideways after hitting its recent high at 349 on November 11, and then it has given almost 2 months or 1.5 months in a what you can say consolidation phase, or it was trading in a sideways with a very tight side range. But what it has done yesterday and in the today trading session as well, that it has breached its 100 EMA and it has lost around 4.6%. And again in the today's trading session it has lost almost 1.6%. And if you look at the volume, then volume is actually above average volume, so it is not, it is obviously the negative sign. So I, at this point of time, I don't think that you need to hold this stock if you're holding it, because already sell signal has created here on means yesterday with yesterday itself. So as of now, Indian Hotel is not looking that attractive, and for the fresh entry, you need to a stock to break out, which is actually 13% from the pivot level. Next one, Yatisha.
I would like to take few queries, right?
Okay,
So
please
this
take.
PS1 is asking about this, can I shift my money in bond market or buy silver ETF? So first thing is that we can't comment anything regarding commodity. So we can't comment first thing. Another is that the investing in bond market or another, it's purely your lookout. Obviously, we are not suggesting here to invest in bond market or commodity market. But yes, meanwhile, equity market is in bad shape. So we are responsible to give recommendation or advice in equity market, not in other market. So that is our limitation. But yes, if someone is interested, it's their own lookout. Anyone can do whatever he or she want to do. But meanwhile, just I would like to say that equity market is not looking that much lucrative. For time being, it does not mean that it will not improve. Maybe sooner or later it will improve. COVID, everyone seen lot of fall, lot of correction in market. So even if you see this 2022, there was multiple correction happened in this calendar year also. So this is only also one type of normal correction. That's it I would like to comment. Otherwise, sooner or later, market maybe next 1 month, 2 month, 3 months, or maybe next 6 months, market will obviously is going to improve. It is not going to remain in this shape only. But yes, meanwhile, it is showing some pressure kind of activities in market. Then another stock is this power grid. So can you show power grid?
Pawan, let's do JM na. We were already on JM. उसके बाद power ले लेते हैं.
Okay.
Amit had already asked that question.
Okay.
Yeah, he asked main time. So please take JM Financial. It is already showing in my screen.
Okay.
And then take power grid. That's fine.
Okay.
So JM Financial, if I talk about, so there is a one upward sloping trend line. So stock is from the last 4-5 months, stock is trending, uh, taking base of upward sloping trend line, connecting from the low of June, July, and now it is about to breach that trend line, and simultaneously it has breached 50 DMA as well. So maybe this is a correction phase. Maybe it will get settled down once again around 200 DMA, that is black color line, which is priced around, I think, 66, 67 rupees. So let's see how it is going to happen in coming few days and weeks. But yes, meanwhile, it is in correction and it may correct further from here, maybe 8 to 10% easily from current level. Okay. Now power grid. If I talk about power grid,
Please wait. I'm just mentioning here. Yeah.
sorry. So power grid is hovering around 200 days exponential moving average from the last 1.5 months, or I can say from the last almost September onward. It is just roughly hovering around uh, 200 days exponential moving average only. Once in the month, once it was tried to breach, even it has breached uh, this 200 EMA in the month of September, and then once again it has reclaimed and moved up to 235, 236, and once again it has shown some correction, and now from the last 1.5 months it is hovering around that. So overall trend is not looking that much attractive in this particular stock, power grid, and falling below 212, 213. Meanwhile, it is around 214 only. So 212 is a critical level, I can say. Once it will breach 212, then maybe correction would extend in downside. So I would not suggest to anyone to buy this particular stock at current juncture. Just avoid for time being. Just wait for another, either another leg of correction or breakout from here. So there is a less chances of breakout in upside. Maybe falling below 212, 210, correction may extend toward 200 or maybe below 200 also in this particular stock. Now another stock, the JSPL, Jindal Steel and Power. One person is requesting Jindal Steel and Power, JSPL. So this JSPL stock from this metal and mining space is outperformed comparatively in last few months, and trend in this particular month also it was trending at a near to this multi-month high level. But now, because of this market bad shape, showing some kind of correction from the last couple of weeks, last 2 weeks actually, and but it is still trending above 21 days moving average or 21 days exponential moving average. So as such, there is no negativity. But if I talk about Nifty Metal, so Nifty Metal has already one second, Nifty Metal. So Nifty Metal has already breached this 21 EMA and approaching toward 50 DMA. So if correction would extend from here in Nifty Metal, then obviously Jindal Steel will correct. So I'm not saying that stock is in bad shape, but yes, this correction may extend because of this bad market shape, and that is why I would like to suggest to you that do not take entry at current juncture. Just wait and watch that how it is going to improve or how trend is going to evolve in couple of weeks actually. Maybe in the next month or after budget, trend will evolve in this particular stock and sector once again. So I would suggest to wait for at least 4 to 6 weeks, 4-5 weeks in this particular space, and as well as in this particular stock. Okay. Rai, please take queries. Sorry. Rai, please take queries.
Okay, let me take the query. There is someone asking the diagnostic stocks, Metropolis and Tyrocare. So the Metropolis, I think both are in bad shape. Yes.
Yes.
So
This weekly chart.
So both are in bad shape. So it's currently trading below its all key moving averages. So this is a rare situation. Like these are the two sectors where when the COVID rises, people will go to again for testing. But this is not a situation where the earliest in the situation of 2021. here at current period of time, we all people are kind of all the small coughs, cold. It's kind of a normal situation, but still that whatever the new variant and its diagnostics and its whatever the infections, how it will be there. So it's too early to point out. So we can clearly see that yesterday it has gained and today it has given a slight profit booking. So at this current juncture, it's kind of bit risky taking this stock. So at this is a chart of Metropolis. So there is no support at current juncture. So better to avoid this Metropolis as well as Thyrocare. So this is also, you can see clearly evident the volatile from the last 2 days because of that news. So it is kind of all the loose hands will buy this at the lower juncture, and today it has dumped that stock. So it's kind of better to avoid these kind of stocks at right and current juncture. Better to wait for idle base to happen, and once it breaks out, just wait for another moment. This kind of news kind of related stocks, you can avoid it as of now. Next one is, I think JSPL is already discussed. Max Health. So Max Health is continues to form on days formation. So from last, I guess from 1 year, it is trading in this consolidation range. And today, yeah, I think it's trading, making a base over here. So better to wait at somewhere on this level. That is 450 kind of level, 450, 460 kind of level is a major hurdle for Max Health. So once it closes this level, one can look for further upside. The next level will be 480, the next resistance level, and then next bull run it may start in Max Health. So but keep an alert on 450 kind of level with the stop loss of this 410 on the downside. Next one is Taj GVK. It's a
okay. You can take that also, Taj GVK.
I think it's all HAL today it has given a breakdown. So already it has break below its 50 DMA today. So earlier there was a support and there is a small pullback. But today the volume is also rising on the rising side. So next leg of support will be placed on this horizon this consolidation range. So that is around 2400 kind of level we might expect in the coming days. So better to if someone is holding, better to book profit at current juncture. Look for better opportunities in the next month. So this is regarding HL. Next one is Taj GVK. So hotel and resort stocks from last 2 days has been hit hard. So at this point of time, that is around, this is a early first stage 216. So earlier breakout level also is broken, and price action also. So this is the early first indication, and also it's same day it has closed 50 DMA. So better to exit at this current juncture as soon as possible. We might see some pullback, some kind of pullback towards 200 kind of level, but it's kind of only relief rally kind of stuff. But it's better to exit at this current juncture, and better to be on cash, holding the cash for the better opportunities. And next one is
one guy is asking to pound only, like he is having shares of UCO Bank 3000 quantity and he has bought at 15. So what he is supposed to do now?
This okay, I will only answer. So at current juncture, I think it has already reached the highest power to pivot, and also it is making a reversal pattern climax top situation over here in the 35 range. So better to book some profit. You can book some profit at 50% of the profit, and you can hold this stock. hold the stock for the 30 rupees on the downside support. So
I would like to add few points actually.
Yeah, okay.
So this particular stock is from PSU sector, PSU banking sector. So there is hope for PSU revival of PSU bank stock price, and there are few reasons, fundamental reasons that clean balance sheet, better credit growth, like situations. And technically, this PSU bank index has given fresh breakout on all-time frame chart. So after considering all these factors, technically and fundamentally, I can say that I can comment that it is in clear-cut in bullish trend. But yes, one thing is there that in last 3-4 months, actually all PSU stocks there was a sharp move happened in all PSU stocks. Maybe 2x rally or 3x rally has already happened in last 3-4 months only. If I talk about this stock, UCO Bank, so it has already gained from 11-12 rupees to 36 rupees, 37 rupees, almost 3x rally. So maybe because of that, now it is all this particular sector and stock is showing some sideways kind of action. So it does, but it does not mean that there is down trend changing scenario happening. Of course, there is no trend changing scenario at least at current juncture. Maybe after a few week and months of rest, once again it will resume upside trend. But yes, if someone has bought it at downside, so one can book at least partial profit, or not only in this particular stock, in overall all PSU stocks. Maybe if market will enter into bad shape, so some correction may extend in downside. If I talk about in this UCO Bank, so maybe correction may extend toward at least 27, 25 rupees. I'm not denying for that. So one can book partial profit, of course, in not only in this all PSU stocks, PSU bank stock, but overall trend is still positive from long-term perspective. Okay, please continue.
Okay, so I think.
May I take it, Kishan?
Yeah, sure.
Okay. So AU Bank, it is asked by someone, AU Bank. So this is the daily chart of AU Bank, and it is just 2%. Already the stock has broke out, and it is just only 2% from the pivot level. So still there is a buying opportunity here, and I think there is no sign of weakness. The stock is trading with all key moving averages as well. But if you look at the last 2 weeks of trading session, the stock has been, after hitting its recent high like 695, I can say, from that price, the stock is actually try to deteriorate. But the deterioration is not so high. It is actually in the sideline, or it is trading in the sideways with just a small bit of correction, I can say. So as of now, looking at the chart itself, there is no sign of weakness. And if you are looking for the stock to buy, I think there is enough opportunity to take the stocks in hand. So what is next, Yatisha? Please tell me the stock name.
LICI.
LICI. We have added LIC and we have taken profit also in this. But what has happened after hitting the recent high in the LIC, like on 20th of December, the market has been very volatile from past 2 to 3 days, and and the stock has actually lost like 5%, and that also with our average volume, again 2.7% in to today's trading session, and that also with our average volume. So obviously this is not a great sign to hold the stock. I think it is we can take it as a sell signal, and if the opportunity will come again, you can buy enter in this particular stock. So I think yes, is the next one.
Cummins.
Cummins India. So the stock has already broke out, and from flat base pattern on second stage, and it has gained almost 13% from the pivot level. That it is still holding 13% from the pivot level. So but the main concern over here, like from 9 December, it has actually tried to deteriorate, and there has been a consolidation. The consolidation phase is not so high, and it is still in the bullish trend only. It is trading up its all key moving average. But the point is, is this a right time to enter? Because already 13% gain has happened from the pivot level, so already that is being missed here. So if you are looking for the opportunity to enter in the stock again, it can be only confirmed by like 15,000 sorry 1552. So 1555 would be the ideal entry point, because that may act as a resistance again. So we can wait for this resistance to surpass, and then we can enter in this stock, or else we can wait for it, because it might because looking at like 8 to 10 days of trading session, it is actually entering in the consolidation phase, but it has hold its 21 DMA. That is the cash. Market has been so volatile in past 2 to 3 days especially, and still a stock is still holding its 21 DMA. So it has, we will see what is happening, what will happen in tomorrow trading session, and based on that you can take your call. This is the next one.
Next one is you can take
You want to take
you
No.
can take Midani.
Nidani?
Midani. M. Midani, MIDHA. Yeah.
Okay, so Midani is clear cut. It is in the downtrend now, and it has already, breached it all its support level. And now the only one hope is like here 196 that may act as a support, or else again it can retest its 200 DMA. And breaching this 200 DMA again, it can bring more negativity, and it can further go into the correction phase. So I don't think it will be great idea to enter in those stock which is actually continues to decline. So I will not suggest to buy this stock.
Next one is Timken.
So Timken is actually double bottom formation breakout has happened, but it has not hold that breakout, and now we can say that breakout has been failed now. So generally we wait for these stocks to again for the breakout to happen. Otherwise we'll wait and we'll see how the stock is behaving, because looking at the pattern from the past 2 weeks, the stock is in the consolidation phase. Only one thing is like it has actually it got support around its 50 DMA. So that may, which is just 2.5% away from this level. So that 2.5% may act as your a stop loss if you want to take a risk, and you can enter here. But 2.5 like 32,000 3200 actually 3200 may act as a stop loss for this, and then you can enter by that stop loss. Next one is Yatisha.
M&M, Mahindra and Mahindra.
So Mahindra and Mahindra, it is also in the consolidation phase, but after hitting its recent low, like 1200 rupees, 1202 low, what is this? To 1202 rupees, the stock has actually showed its resilience. It has also reclaimed its all key moving averages, but it was not holding those gains. And what has happened again, it entered into the sideways trend, and in today trading session, what has happened, it has actually breached this all support level, like 100 DMA, 21 DMA. Even I think it has breached its 50 DMA, because all these DMAs like 21, 50 and 100 is actually nearby. So it has breached that support level. So I don't think we should enter here, but the support is placed at again 1200 level. So if we can find a support at this in this stocks near its 1200 level, then you need to see how price action is behaving, and then you can take your call in this Mahindra and Mahindra.
Okay. So let me take a few queries.
Yeah, sure.
Okay. So first one is TVS Motor. So TVS Motor in the from last May, actually it has given a very good run until it has almost doubled, almost 100% doubled, already doubled, and it has fallen, and it's this moving average also. If you see, the 21 DMA has been fell towards the lower level, and today on the sideways, it's 100 DMA is taking support, but at current juncture, it's better to exit. The first level of exit will be coming from this level when it breaks its 50 DMA. So at current juncture, it's not advisable to take the fresh position. So only once after this closing above this, when it coming back to the pivot level, so better to take at that current juncture. So it's likely to continue to on the sideways to negative bias will continue in TVS Motor. So falling below this level, that is 1984. Yes. So 984 is a key level where earlier breakout also it is placed. So this is a level once it breaks below. So further correction for next leg of correction we might see in TVS Motor. So current juncture there is no buy. So those are already bought. You can exit at current juncture and book a profit. And next one is ITC. So another FMCG stock. So even here, similar to the previous Motor. So after making a high, it's trading in consolidation range. So this is a level where 320. So 320 is a level for next level of support for ITC. So breaking below that. So once again, it may touch 200 DMA. So at current juncture, not advisable to buy. So one can keep on the upside 340 kind of level on the upside, but there will be a slight hurdle we might see in 350, 360 kind of level. So where all those who bought at the higher level might exit at this price structure, and so 340 is a first level of breakout level one can see on the upside. Next one is here. Yeah.
It's almost beyond 5:30.
Okay.
And there are a lot of queries pending. Just you share the name with me, and I will give comment in rapid manner in last 7, 8, 10 stock. Then we will wrap up this session.
Okay. So
one is HUL. I am starting.
Okay.
Hindustan Unilever. Overall trend is positive in this FMCG space and this stock also, but meanwhile it is showing some sideways kind of action. And disclaimer is that we have already added in our TraderSmith portfolio. Please follow us for further action. Next.
Next one is Tata Power.
Tata Power negative, trading below all key moving averages, looks negative at current juncture.
Tata Motors.
Tata Motor. So Tata Motor negative, trading below all key moving averages, looking negative. Meanwhile, it's in support area. Support area is placed around 390. Breaching below this may extend further downside toward 360, 350 kind of level.
Next one is Coromandel.
Coromandel, it has already breached 200 DMA finally. And but there is one more support here at current level that is placed around 885. Breaching below it, even today it tried to breach that level and slipped to up to 882. So maybe below it, once again, it will extend downside rally.
Next one is GNFC.
GNFC. Downside, trading below all key moving averages, looking negative. But not that much negative. Maybe it got support around in the range of 525, 520 kind of range. So it may correct another 4-5%, but there is a strong support around 525 range. Lupin. Disclaimer is that today only we have added in TraderSmith portfolio. Pharma index is showing some positive acceleration. Maybe it has not given breakout. Maybe in next few days it will give breakout. And on the hope of that only we have added Lupin. So looking attractive to us at the current juncture. Please follow us for further action.
Bharti Airtel.
Bharti Airtel we have added, and today it has triggered our stop loss. It has breached 50 DMA and closed below it. So maybe let's see how it is going to be. We have been coming there. Meanwhile, to us, it is looking a little bit negative.
Next one is Balakrishna Industries.
1 second. Balakrishna Industries, na?
Yes.
So, trend is positive. There was a trend line breakout, trending in all key moving averages, but it purely depends upon market condition. If market will support it, so maybe it must gain at least 70-80 rupees from here in the range of 22-40. So trend is positive, but let's see how market is going to behave. Then stock will also behave. And in such case, it will move toward 2220 to 2240 in upside.
Next one is NTPC.
NTPC showing negativity. Today is at reclaimed or retested 50 DMA, sorry, 100 DMA. So let's see how it is going to behave in coming days. Suppose it will start trading below 100 DMA, then maybe next target would be around 155 or 158, around 200 DMA in downside.
Okay. Do you track the Themis Medicare?
No, I don't track
Okay.
it.
So sorry for that. Pre-call.
Pre-call. Pre-call trend is positive. Yes, no doubt on multi-time frame chart. But let's see how it is going to behave. If market will enter into bad shape, then obviously stock will also not move. But trend is positive. I would not suggest to take fresh entry, but if someone is holding it, please follow the trailing stop loss of 184, 185 and remain invested in the stock. Suppose the stock will fall, then maybe correction will extend. Otherwise, it will remain traded in upward trajectory only.
Next one is AB Capital.
Aditya Birla Capital.
Yes.
Overall trend is positive. Stock has given multi-month breakout on multi-time frame chart on high time frame chart. But from the last 7-8 trading session, it is showing some negativity. It is still holding 21 EMA. It is, I can say, it is a trending in the sync with market direction. So if market will turn negative, then obviously if correction may extend. Otherwise, overall trend is positive in the stock.
Next one is
I think let's let last one.
Larsen is there. LT.
LT, na?
Yes.
So LT was looking quite attractive, but now it is also entered into correction, or maybe in my opinion, once again, this is my personal opinion, it may be remain outperformer in coming year 2023. But meanwhile, it is correction. I would suggest if someone is looking for mid to long term perspective, so this is a good stock to have in their portfolio from long term perspective and follow buy on dip strategy in this particular stock. So I think we have tried to answer almost all major queries.
Yes.
Just let's wrap up this session. It's almost 5:40. Thanks for joining this session. Thanks all of you.
Thank you all.